Welcome. It's Thursday, March the 19th. I'm Martin Strait from Trend Letter, and we got a lot to talk about here. Another wild day in the markets. I think we should start with gold. So when you look at gold, we can see here it's been on a nice uptrend for the last few months since last August. But as we can see here, remember on the end of January, we had this major sell-off. And then basically it sold off another day. And then it's just been sort of trading in this kind of sideways pattern. But from the bottom of that first big correction, that was our first key support level at 48.70. And yesterday, as we sent a note out to our subscribers, that level got broken. And that is something then you have to pay attention to. And then by the end of the day, it also broke through this uptrend line. So there's two sort of serious signals for us that something serious is happening here with gold. And then, of course, today we had another big sell-off. We actually broke through our next key support, which was the bottom of this sell-off. And now that we've actually moved on to that. And so at 46.60, that's kind of our first key support now. We would expect that we'd probably get a bit of a bounce here. You can see that it actually got down to about 44.85. So yeah, we could see a little bit of a rally here. But I think you're soon going to see this tested again. And ultimately, I think it's going to get broken and we could work our way down to 43.80. And that would be a pretty significant correction over the next few days or even weeks. But again, the trend here now for gold has been broken, and so we have to be careful and have to be prepared. Gold sold off. Remember the whole big rally up here, where gold was always a safe haven play, but in the last 6 months, gold's been this real momentum play where everybody and their dog has been buying into gold. And basically, when we got to here, there's really was no more buyers at that point. The other big key is central banks were big buyers of gold. With all of these, the war going on, with energy being a big issue, I think you're going to see the central banks pulling back on their gold purchases. They may even be selling some in order to raise some money to fund some other things within their country, because a lot of countries are going to be suffering quite a bit due to all the energy crisis going on. So 43.80 is a very key support level. If that level breaks, now we're really looking at some deep stuff. So we'd be looking down here at this level, which would be what, 39.20, and all the way down. We could end up even going all the way down to where the big rally kicked in here, and that's like 33.35. So watch this level first, 46.60. We see if we can get a bounce here tomorrow, maybe early next week. But really watch 46.60, because if it breaks, there's really quite a big jump down to 43.80. All right. Now let's take a look at silver as well. Similar kind of story. With silver, we highlighted before, similar big drop here. And then it sort of, it bounced around within that. Then this support at 72. The first resistance is at 92. You can see it tried to break through resistance there a couple times, but it couldn't do it. And so it couldn't hold. And then again, lower highs, lower lows, all the way down. And today we've actually tested it. It actually pierced through. But again, similar to gold, it was able to hold so far. And now the question is, can we get a bit of a rally here? Again, similar to gold, we might get a bit of a bounce next week or even tomorrow. But ultimately, I think we're going to drop further. And I would not be at all surprised to see silver drop all the way back to $52. Now, if you are wanting to get into gold and you weren't into gold or silver at all, silver is a lot more volatile. Be really careful buying it here. If you did want to buy some here, think about dollar cost averaging, where you buy a little bit now with the idea that you're probably going to get another opportunity down here. Now, there's no guarantees here. Things could all change next week and we get a nice big rally up. But again, I'm just saying, from our models, we watch the charts. This is certainly trending down. We're at a key support level. If this doesn't hold, this becomes in play. All right. So there's gold and silver. So then the question is, well, why are these, these are supposed to be safe haven plays, especially gold. You've got a war in Iran. You've got all this energy crisis going on. Why is gold not holding up? And there's a couple of reasons, in addition to the fact that these are parabolic move in silver, especially. People that had never bought silver before, they jumped in right in here. And we talked about this at the World Outlet Conference that you did not want to be buying in this area at all. And that's the last people in, the last ones in, and they got killed. They got crushed. They came in there and they lost 40% of their investment right off the bat. So that was one of the big reasons. Now these people are they're losing faith in this, so they're bailing. The other big ones, okay, are more systematic, more fundamental. So we'll take a quick look at, we'll look at the bond market. Now, most investors will go, well, why do I have to look at the bond market? Well, because it's important. Now, this is the US 10-year yield. You can see it peaked about almost 4.8%. Then it just came all the way down. Everything was going to be good. Everybody was really happy. People were buying the bonds, which means the yields come down until, basically until the war happened. We started to get some bounce here earlier. And then, of course, we had the war kick in. And then the US dollar became, of course, the number one safe haven play. And now people will say to you, they'll say, well, why are people buying, U.S. bonds and U.S. dollars? Because, the U.S. is in big trouble. Yeah, it is. But again, it's the least ugly house on the block. You look at all the other countries. You look at Europe. Europe is a mess. Japan's in trouble. Where are you going to go? I mean, China. There's a lot of trouble out there, and so. What I'm seeing here is that the bond market is predicting they don't like something that's going on here. And so they're demanding higher yields. And when they want higher yields, that is not good for the stock market. Because if you can get right now like 4.3% in the US 10-year bond, if we're going to look at the stock market as well, but we just saw gold sell off, we saw silver sell off. You can lock that in and you're going to get 4.3% for each year. And I mean, a lot of people will think that that's a reasonable thing to do. I would not buy any government bonds at all. I'd stay away from them. But a lot of foreign investors will do that. And when they do that, when they buy government bonds, of course, they're also buying the US dollar. If a European investor wants to buy a US 10-year bond, well, he's got to convert his euros into US dollars to buy those bonds, and that's good for the dollar. So we can see here that the dollar was also, trending down. It moves a lot like the yields do in the 10-year. And so as you're going to get, those higher yields, and again, if the war continues, if somehow everything turned out great next week, or Trump decides he's going to calm everything down, well, that's fine. But, it doesn't really look like anything is going to happen that quick. So if things persist, then you're going to have more and more people wanting more safe haven plays. And the US dollar, buying US bonds, et cetera, is going to be one of those plays. So it's touched the 100 mark here. So we got there, that was resistance, there again. It's tested it here. Now it's dropped the back below this little triangle pattern. But I would not be at all surprised to see it rally back up to 104, somewhere in there. And it could go higher depending what happens. So you have to understand that connection. The US dollar is a big part of why gold and silver are retreating, and copper, and most of the metals. All right. So that's all that circle. The other one we want to look at, of course, is energy. We want to take a look at oil. Now, with oil, obviously with the war going on and all this action, I mean, here we're talking, in the last couple of weeks here, this is all based on war action. We actually in our subscriber base for Trend Letter, we had projected when oil was down about $55, we were targeting about $72 as a key target. And then, of course, the war broke out. I mean, we hit our target almost right on, and then the war broke out, and they just shot up. And we saw oil jump up to about $120. Now we have a bunch of oil plays in our portfolio, which has been fantastic. But now you have to look at when you look at oil right now, you can see that with all this stuff that's been going on, oil's been going sideways here. So that tells me that the oil market is expecting that there's going to be some breakthrough here. Now, interestingly enough, I mean, we've got Iran that's been attacking Qatar's refineries. Israel attacked some Iranian refineries. So you would think that oil would have, logically just spiked again, but it hasn't been. And I think that we're going to have we're into a thing where they're hoping that the Strait of Hormuz gets open. The U.S. military is trying to get that done. Trump's trying to get other countries to help out. So far, none of them want to. So I think that's the big player. We're technical traders. This is all noise to us anyways. We just watch what the market does. And right now, the market's telling us so far, oil's not that worried right now. Now, the key here is this is it's support line right now. So oil could certainly just slowly work its way up. And I mean, it could come back up to that $120 level, no problem. But one thing to understand, though, is when things do calm down, and and that might be a week from now, it might be 6 months from now, but at some point that Strait of Hormuz will get open, and then things will start to slow down. And once the market is confident that this trend line is done, I think you could see oil just drop pretty dramatically down into the $70, $80 range fairly quickly. And then if supply starts to come on board, then you can get some hope there. Another key factor, I've mentioned this in a couple of interviews recently. We told to our subscribers, the U.S. is a net exporter of oil. It's the world's largest exporter of oil now. And I can certainly see, in the U.S., gas prices, I think California, I think they're up to $6 almost. So you have to look at that. And, the U.S. is they're having an election in November. Trump needs to somehow get gas prices down in the U.S. So a logical solution for him could be, let's not export that oil anymore. We'll keep it domestically. That would keep domestic gasoline prices, oil prices, energy prices reasonable in the U.S. And Canada could have a similar scenario. So there could be something worked out between Canada and the U.S. and where the North American oil prices and gasoline prices don't go sky high. But what that would do, it would mean that if Canada and the U.S. quit exporting to other countries, so especially the U.S., so if they quit exporting to Asia, so Japan and China and India, and if they quit exporting to Europe, I mean, think of Europe and Asia. They used to get their oil from Russia, then they can't get that anymore. So then they needed U.S. oil, and then they had the Middle East oil. And well, now that Middle East oil is not getting through. So for all of those countries, this current state is serious. But if the U.S. decides to ban exporting oil and keep it local, keep it domestic, that's going to be a huge problem for Europe and Asia. So something to keep an eye on. And again, if that's what they were to do, I could see the oil prices starting to drop finally. So keep an eye on that. So that's it for today. Keep your head up, folks. It's going to be volatile for a while. We'll do another one of these videos next week. Stay tuned. Take care.